Council concerning cash waqf on 2002. So, in a positive law or positive regulation, Indonesia now recognize the cash waqf in the regulation daily in the practice. Regulation of Indonesian Waqf Board number 1 of 2020 detailed the cash waqf regulation in Indonesia. Okay, now the type of asset investment and yields. Waqf land in Indonesia is about 4.359 billion meter square. This is not million, this is billion. 90, not 60. This is data from Ministry of Religious Affairs 2016, and approximately 2,179.59 trillion rupiah. If we convert to USD, it's about 155 million, million USD. And Indonesia is about Indonesia comprises 400,000 Nazirs from Sabang to Merauke. And if you look at the pie chart, the type of Nazirs, about 66% individual, 18% organization, and 16% legal institutions. So domination of Nazirs in Indonesia is individual Nazir. I think I should make it bigger, right? Okay. And now, how about Nazir of cash waqf? Because we make a different regulation between Nazir who manage cash waqf and Nazir who manage only waqf or land waqf. According to data from Indonesian Waqf Board, January 2021, there are 264 Nazirs cash waqf in Indonesia, and the total of the collection, it's about USD is about 27 million USD. It's about total cash waqf until the first of semester 2020. Now, how about the investment methods? We have variation. We have methods of the investment, and if you look at the slides, there are 5 types of investment. The first one is rent house, for example, Gria Sakina in Ciledug. Hotel, Waqf Hotel, for example, Gambir Anom Hotel at Solo. Solo is the city of President. And Memorial Park, this is a type of productive Waqf Memorial Park. For example, Firdaus Memorial Park at Bandung. And in the form of cottage, for example, Darul Jannah Cottage Bandung, and also rent office in the form of office, for example, Menara 165 Jakarta. And if we count, if we look at the total cash waqf only managed by BWI or Indonesian Waqf Board, because Indonesian Waqf Board is also one of the 264 Nazir cash waqf or cash waqf Nazir in Indonesia. Only in BWI, total cash waqf is around 59 billion rupiah. 59 billion, this is not million, this is billion rupiah. And there are 3 programs, Kalisa program, hospital building and central building. And also from the Kalisa program, we have around 7 programs. Kalisa is a type of cash waqf that we invest in the monetary instrument, and the result of this Kalisa will be distributed to the 7 program for the ventilator of COVID victims, and for the students of IPB, for the parents of the students continue their leave, for the ulama, care ulama, all program, clinic buildings, and also scholarship for the students. How about the Islamic bank? What are the roles of Islamic banks in the context of cash waqf? Alhamdulillah, in the 2020, there are 22 Islamic banks receive cash waqf. So they will issue the certificate of cash waqf in the name of the Nazir. They are Bank Muamalat Indonesia, Bank Syariah Mandiri, Bank BNI Syariah, Bank Mega Syariah, Bank DKI Syariah, Bank BTN Syariah, etc. But now, since the 3 banks joined, merger in the one big banks, Bank Syariah Mandiri, Bank BNI Syariah, and Bank BRI Syariah, merger to be one, the biggest Islamic bank in Indonesia. We call it Bank Syariah Indonesia. So now, from 22, now it is at 20. 20 Islamic banks receive cash waqf. And how about the major challenge? I think all countries faces these challenges. In the economy perspective, for example, the challenge is how to educate the public to be able to do cash waqf. From the regulation, amendments to this waqf law are still needed, given some urgent matters, because the law has been launched 16 years ago, and in the 16 years, and in the last 16 years, so many improvement in the Waqf management. Technology also, there must be good regulation immediately about this financial technology, especially for the fundraising. Now, in the fundraising of Waqf and also Zakat, financial technology is a must. All Nazirs, all Amil use this approach to collect the Zakat fund or Waqf fund from the society. And in the social, advocate the community to give Waqf. Environment, it takes effort to unite the Ummah, and political will is needed from the government to develop Waqf in Indonesia. For more information, I think you can read this book, chapter 15, Waqf Development in Indonesia. The book is Giver 2019, Global Islamic Finance Report 2019, and in the chapter 15 or chapter 15, I wrote this chapter with some friends, titled Waqf Development in Indonesia. This book can be, I think this is from Cambridge, so you can contact Cambridge, IFA, for this book. There is a line here for phone and also the net, the email. And also in this book, Waqf-led Islamic Social Finance, Innovative Solutions to Modern Applications. This is a publication by Routledge, UK. I wrote this in the chapter 6. I and some friends wrote chapter 6, and the title Contemporary Approach in Waqf Management. I think you can read this both these books to enrich your perspective about wakaf in Indonesia. I think that's all. Thank you. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Thank you very much, Ustaz Henry Tanjung PhD. And let's move to our second speaker, Dr. Amir. The room and time are yours, Doctor. Please.
Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Thank you, Mr. Chairman, and also Bapak Henry, and all the speakers. My name is Amir Shahruddin. I'm currently leading Malaysia Waqf Institution. We call it Yayasan Waqf Malaysia. Before this, I'm a lecturer in University Science Islam Malaysia, USIM. So, ladies and gentlemen, I don't have slides to present, but I will use my experience and my little knowledge to share with you the experience of Malaysia, how we develop and how we try to utilize Waqf asset in Malaysia. Basically, we are different from Indonesia, where in terms of managing and govern the Waqf institution, in Malaysia we are not liberal, or we are not free like in Indonesia, because in Malaysia all of Waqf projects and all of Waqf institution are closely monitored and governed by the religious authority. Because it fall under religious matters. So in Malaysia, the religious matter are controlled and monitored by the state. In Malaysia, we have 14 states. So Waqf is under the state religious council and state authority. So if we want to, for example, to collect Waqf, cash Waqf, or if someone want to donate Waqf land to someone, it must be executed and implemented through what we call as majlis. So here we don't have like individual mutawali or individual agent of Waqf to administer or to manage a Waqf. It's all belong to the state. So in this context, you have advantage and disadvantage. The problem with this, what we call this framework, is that the centralized matters this, because it very bureaucratic process. For example, if you want to develop land, or you want to manage or invest cash Waqf, it has to go through a long process, bureaucratic process. So that is one of the disadvantage of having this type of arrangement. But what we can ensure to our Waqf, to our donors, is that we are better control, because we don't give the right to individual to manage the Waqf. We control, the government control, so we can make sure that the amanah, the trust is in control with a good condition, because we have a good corporate governance, we have reporting, we have structure to make sure that the amanah is protected and is managed very well. Okay, but still in Malaysia we do have a problem where we receive a lot of we hold a lot of Waqf property, but the Waqf property is not developed very well. For example, we have a land, but the land is remain idle without any project or any productive project that we do in that land. The problem is, I think, is everywhere in all Muslim countries we face the same issue, where we have a lack of funding. So that's why nowadays, I think similar with Indonesia, why we promote cash wakaf, because we see the problem. Problem is we have a lot of property, we have a lot of many asset, wakaf asset, but the asset is not so productive because we have problem of lack of funding. So that's why cash wakaf come in. We promote a lot of cash wakaf in order to try to develop the wakaf asset. So if someone asks me which one is preferable, whether to accept wakaf land or wakaf property or to receive cash, I would say that nowadays we prefer to have cash wakaf rather than the wakaf property, because sometimes the wakaf property can be a burden or liability to wakaf institution. Because, for example, donors ask, okay, they give land, but they ask us to build mosque without any funding. So it is a burden to the wakaf institution to try to build mosque or to try to build madrasah or try to build something which is productive for the ummah. So nowadays, I think in the future we will see a lot of cash wakaf to be promoted and also to be gathered. And the problem is in cash wakaf is that is a lack of promotion. So I think if we compare with zakat collection in Malaysia, the zakat collection nowadays in the whole country, we managed to get around nearly 1 billion USD. 1 billion USD. So it's quite huge amount that we can gather. But in terms of cash wakaf, I can say that it's just 1% of the zakat collection. It's very, very small and very, very little. 1% if we compare with zakat amount that we collected. But this, I think, probably because of the knowledge and the awareness of among Malaysian, especially among the society, is still low. That they have a good knowledge about zakat, but not really on wakaf. Because traditionally they understand wakaf is only for the land and also to build mosques and to build a madrasah. But nowadays, when we promote cash wakaf, we said we can do a lot of things by using cash. We can invest and we can use the proceeds from the investment to do a lot of charity projects. So this is, I think, came to the point is that the cash wakaf, the level of awareness and the level of understanding of cash wakaf is still low in Malaysia. Okay, next is on the issue of the management of wakaf institution. As I said that in Malaysia, the wakaf institution is belong to the state. And if we look at the state level, those who manage wakaf asset and also cash wakaf in religious council, in our majlis, are not competent enough, are not capable enough. They are not professional. So we do have this problem. I'm not sure whether in Pakistan or in Indonesia, the mutawali, the agent or those who manage wakaf asset are capable or are competent enough. But in Malaysia, I can say that we still need to improve that angle. So this is where we think that those who manage wakaf, in order to develop this sector, the wakaf sector, we need to improve, we need to enhance our skills, our competency, and our capabilities of the managers. Because, for example, if someone want to invest the money, the cash wakaf that we collected, I think they are not fund manager. They just train in Sharia, or they just train in administration, but they are not fund manager. We need someone who, like a professional fund manager, who can invest cash. So who know how to generate income from the cash that we keep and we collected. Okay. So that's why I think in the future we need to train, or we need to employ, we need to recruit a professional in order to join our team in managing the wakaf. Okay. And the other point that I want to share with the rest is that nowadays we are quite aggressive, or we are quite active in improving the transparency and also improving the reporting of cash of asset, because we do have a scheme of potongan gaji, or salary deduction. Government servant, our employee, they can deduct their salary through our system. They can deduct the salary, and the salary will go to. So this salary deduction, those who contribute to this fund, they will ask what happened to my contribution. So we need to share with them the project that we do, and how the contribution will benefit or has benefited the community. So we need to improve our transparency, and also our reporting, so that the contributor, the donors, they know exactly where we benefit the money that they contributed. Okay, so I think that's all from me at the moment. From Malaysia, I just touched 3 points. One is on the institution of Waqf. We are a bit different from Indonesia. I'm not sure in Pakistan how, or in Nigeria. And second is about the level of competency of the managers. We still have problem. Is on the level of awareness about the Waqf itself. If we compare with zakat and Waqf, the contribution of Waqf is still low. Okay, thank you very much.
Thank you very much, Dr. Amir. Well done. And then what I can capture from Dr. Amir's presentation is that in Malaysia, Waqf is centralized, rather different from other countries. And the advantages, probably it can be collect with maximum effort, but probably the disadvantages is the administrative issue. Right, Doctor? Okay, let's our third speaker to deliver his presentation. Dr. Salman. Yes, Doctor.
All right. Can I share my screen?
Yeah.
All right.
Please.
Let me
Can
see.
you? If you find any problems, we can help you with the PowerPoint. Oh yeah, that's right. Please, Doctor.
All right. Is the slide changing? Can you see?
Yeah.
All right.
Yeah.
All right. Bismillahirrahmanirrahim. Thank you to Indonesian Waqf Institute, Professor Henry, Dr. Amir, Dr. Bayu, and all the respected panelists and speakers who have joined. And this is the August forum. This is a very important forum where we are discussing the global experience of Waqf administration and management. I will be presenting the case of Waqf in Pakistan, and what are the different kinds of structures that are in operation in Pakistan, and what are the shortcomings in the regulatory framework and also in the administration. So my presentation is going to be about Waqf experience in Pakistan and the way forward. The presentation outline is like this. First of all, I will talk about what is the private philanthropy scenario in Pakistan, and I would show a few examples which show that the private philanthropy scenario in Pakistan is quite promising when it comes to the potential for cash Waqf institutionalization in a country like Pakistan, where the poverty is quite high, where a lot of people are young and they are unemployed. So we are going to talk about it, and then briefly I will touch upon economic potential of Waqf in contrast with the other social finance institutions in Islamic economics like zakat and sadaqah. Then I will discuss what are the institutional structures that are being practiced in Pakistan. There is a corporate Waqf model, there is a philanthropic model. So I will touch upon that are functional in Pakistan. And then I will also talk about the regulatory and policy framework in Pakistan. And lastly, I will talk about the policy recommendations for the Islamic financial industry, for the central bank of the country, and also for the government to make certain changes in laws so that private administration and establishment of Waqf can be incentivized and can be encouraged in Pakistan. All right. First of all, what is the private philanthropy scenario in Pakistan? Before we discuss that, let's talk about the economic statistics of the country. Pakistan is a country which has a huge population, and a significant part of that population is living below poverty line. So if we talk about poverty rate, the absolute poverty levels have declined in the last 20 years. But still, if we take the national poverty line estimate, around quarter of the population is still living below the national poverty line. So there is need for social finance. That is quite clear from this statistic. Now, if we talk about the government in a developing country like Pakistan is constrained by two things. One is low tax to GDP ratio, which is around only 11 to 12% of GDP, and there is high debt servicing. So whatever tax is collected, about 45% of that tax is just paid in the form of debt servicing. So very less amount is remaining after paying the cost of debt. So only about 19% of the total budget is allocated on development. There is high fiscal deficit, and that fiscal deficit is also majorly financed through interest-based instruments like treasury bills and so on. Government funds are very limited in terms of spending on development. So all of these things really show that if we talk about Pakistan, there is need for social finance, because the financial institutions are also not quite forthcoming when it comes to financing development, when it comes to financing where you don't have collateral, you don't have documentation as much as is required by the formal financial institutions. So in that scenario, it is important for the social finance institutions to come forward and complement the limited budget of the government, and also complement the gap that is created because of lack of access to formal financial services. Now, when we talk about financial inclusion, very few people have banking accounts, like about quarter of the population has banking accounts. And when we talk about microfinance outreach, it is significant as compared to some of the other countries, but given the huge demand for microfinance, like about 50 million people are under the poverty line, they are living below the poverty line. So as compared to the potential demand, the microfinance outreach is only 10% of the potential. Now, if we talk about the private philanthropy scenario in Pakistan, that gives us very promising scenario. There are institutions like hospitals, Shaukat Khanam Cancer Hospital, SIUT, which is a kidney transplant center. These have been established through private donations, and they are operating on a very large scale. They are serving the whole of country, and they are just privately funded. They do not have any single penny coming from the government or from the development finance institution. They are principally funded by the private philanthropy. And there are institutions like AD Foundation, Indus Hospital, which are also operating on a very large scale, and they are privately funded. So all of this gives us huge potential for institutionalization of these private philanthropic activities using the institution or the structure of cash waqf. But unfortunately, the scenario is that people like to pay to these institutions, they like to pay charity, but they do not recognize it that this can be done through cash waqf, or this can be is structured like a cash waqf. So they do not use the name, but the essence or the philosophy or the structure of cash waqf is very much there in such philanthropic activities or social intermediation. If we talk about private philanthropy estimate, several studies have given estimate of how much private philanthropy is mobilized in the country in a typical year. So some estimates put the private philanthropic donations to about 554 billion rupees. So this is about, if we divide it by 150, we can also get an estimate of it in the form of USD. So about $400 billion, $4 billion is donated through private philanthropic activities. So this is quite a significant amount. If we put it as a percentage of GDP, this comes around 2.5 to 3% of GDP. So about 2.5 to 3% of GDP is donated by people. But most of this donation is from individual to individual. And the problem that comes from this kind of mobilization and allocation is that it is not that impactful, it is not quite organized, and then there remains a lot of projects which remain underfunded. A lot of the private philanthropy is paid to madrasas, is paid to build mosque or renovate mosque, but very less amount is allocated in the form of education, in the form of modernizing institutions. So there is a gap that we see. Now, if we talk about the Waqf institution, it's a very important institution in Islamic social finance. It is an institution through which one can pay donations, pay charity, and can institutionalize it as well. So if we look at this table where the comparison is made between zakat, waqf, and sadaqah, we can see that waqf is very much similar to charity, but it has the potential of institutionalization, which is not there in normal charity, because in normal charity there is less potential for institutionalization, and there is also no consistent or permanent source of funds which can be utilized over the period of time, not just once. So Waqf institution is very much open to institutionalization. It is also quite different from zakat in a sense that the allocation from Waqf can be made more flexibly as compared to zakat. We know that zakat is spent on specified recipients, whereas Waqf can be used for meeting the personal needs of people, and it can also be used to build infrastructure, to provide public goods, to fund different kinds of infrastructure projects which indirectly benefit the poor, but where it is not quite necessary to have tamleek or private transfer of ownership. So Waqf is a very important institution to build social safety nets, to provide public goods, and it can also create wealth redistribution and reduce private concentration of wealth, because if a donor donates to philanthropic activities like establishes a waqf, then that part of wealth in the society is a kind of common property resource from which all people benefit, the whole community benefits, and it's not just held privately. Whereas what we see in capitalistic societies, capitalistic economies, is that there is huge private concentration of wealth. The top billionaires have as much wealth as compared to the total income of some of the poorer countries. But that wealth remains in the private hands and it does not get invested or spent on social activities. But Waqf provides a way so that private concentration of wealth can be reduced and wealth can be used by the community in a broader way as compared to in a limited sense. Now, let me give you the institutional structure of Waqf in Pakistan. This is the structure that was published in Islamic Social Finance report by IRTI. It has given institutional structure of Waqf from different countries, and this is basically the case of Pakistan. So what happens is that Waqf is coming under Ministry of Religious Affairs in Pakistan. The Ministry of Religious Affairs is basically the principal authority, and then it sanctions the establishment of Waqf, which are overseen and administered by Chief Waqf Administrator. And the Chief Waqf Administrator is basically the representative of government, and this recognition of Waqf is done at the provincial level. So it's quite a centralized system, like Dr. Amir was discussing the case of Malaysia as well. It's quite centralized in the case of Pakistan as well, that we have the Chief Waqf Administrator, who is the representative of government, and that Waqf Administrator manages all the different types of Waqf at the provincial level. So there is a need for decentralization in Pakistan as well. Now, let me give you a global overview of the regulatory framework of Waqf in different countries. Like if we take the case of Malaysia, in Malaysia there is no private mutawalli, there is also no recognition of family Waqf. The Waqf is only registered in the name of the Islamic Religious Council as proprietor, and Islamic Religious Council or Majlis is the sole Nazir or trustee. In Indonesia, it is little bit flexible, but still not quite as much. Pretty much same scenario in Singapore as well. In India, we have recognition of family Waqf because India is a country where there is huge Muslim population, but still the whole population is not Muslim majority. Muslims are in minority in India. So that is why they established Waqf pretty much at the private level, and they were not quite governed in a centralized way like we see in the Muslim majority countries. If we take the case of Pakistan, in Pakistan, the Waqf is allowed to be established, but it should be permanent. It cannot be temporary. There is permission to create Waqf, but registration is required. If unregistration is done, it is not punishable. Meaning that if Waqf is revoked, if it is unregistered, it is not a punishable crime. Donors can be Muslims. The endowed assets are not inclusive of financial asset. There is no mention of financial assets. So if we go through different regulations regarding Waqf in Pakistan, what we see is that the regulations are made with the premise that Waqf is only going to be established for the purpose of building a mosque, or for the purpose of managing the madrasa, or for the purpose of having tomb of a saint. So these are the different kinds of Waqf that have been established, and it is not quite recognized that Waqf can be used for broader socio-economic activities like building schools, hospitals, and providing different kinds of infrastructure. So there is no specification of financial assets. At the same time, there is also no prohibition that financial assets cannot be used for making Waqf. Family Waqf is not recognized. If we talk about the administration, it is quite centralized. State is the supervisor. The chief administrator is the state's agent or state's representative who appoints a manager to control, manage, and maintain Waqf asset. Chief administrator appoints a manager, and the mosque and shrines have religious purposes committee who oversee the operational activities. But there is not much provision for private mutawalli or private nazir in Pakistan as well. Now, if you look at the different models that are in operation in Pakistan, we come across Hamdard Waqf model. Hamdard is an institution that was established in the early part of 20th century. They have a corporate Waqf model. So what they do is they have a laboratory operations, Hamdard Laboratories. They produce different kinds of herbal products, herbal medicines, and so on. So they sell these products on a commercial basis, and then they earn profits, just like a normal corporation. But what they do is 85% of the profit of Hamdard Labs commercial operations is donated. And these donations are then used to allocate funds for poverty relief, for education in the form of scholarships to students, and also to establish healthcare centers and to fund the operations of those healthcare centers, and also to provide medicines and other infrastructure to those healthcare centers. So what they do is they have a corporate Waqf model. The seed capital was provided initially. to establish the corporation. The corporation sells products, and the profits, 85% of those profits are donated in the form of donations, and these donations are used for poverty relief, education, and healthcare. So they have a sustainable system of having a sustainable, consistent, and reliable source of funding, because the corporate operations are ongoing every quarter, every year. They keep on earning profits, and these profits are donated, and they become the funds for allocation in the form of poverty relief, education, and healthcare. Now, there is another Waqf model, which is the Ehsan Trust Waqf model. This is established by Mizan Bank. So Ehsan Trust is established by Mizan Bank. It is an arm of, you can say, social finance arm of Mizan Bank Limited. Mizan Bank Limited is the largest largest Islamic bank in the country of Pakistan. It was the first Islamic bank that was established in Pakistan in the year 2002, and it has the majority share in Islamic banking. The overall Islamic banking share in Pakistan is about 16% of the total Islamic banking asset. Now, what is Mizan Bank does is it provides commercial banking operations just like any other Islamic commercial bank. But when people are not able to pay the installment or the murabaha price on time, Mizan Bank has a provision that to avoid people deliberately not paying on time, they ask people to pay to charity. They would not take it as people to pay to charity if they deliberately do not pay on time without any valid reason. So what happens is that these charity amounts are collected by Mizan Bank, and they have to find a source to allocate these funds. So what they did was they established Ehsan Trust just for this purpose. So Ehsan Trust get its donations from the indigenous charity payments received by Mizan Bank from the late paying customers, and these are then donated to Ehsan Trust, and Ehsan Trust uses that to provide a scholarship to university its students in the form of Qard Hasan, and then these students repay the Qard in installment during their education, and then also after their education. The installment plan is such that during the education the installment amount is quite small, and after the person has educated and has got some income earning occupation, then the installment gradually goes up. And then this thought that, well, if we can do it like this, why can't we take donations from the individual donors who are in Pakistan and who are also outside of the country working in different parts of the world? So they started taking donations from the individual donors as well. So now they have a consistent source of funding. So basically what they are doing is they are operating on the cash Waqf structure, and they also call themselves as a Waqf-based institution. But the problem is that the regulatory framework is quite stringent, quite restricted. So people do not call their institutions like cash Waqf. They would not name it like this. But if you look at the structure, if you look at their operations, they would look very much like a normal cash Waqf and the way cash Waqf would operate. Now let me also show you the Akhuwats model. They also have a cash Waqf based Qard Hasan model. So what they do is they collect donations from institutions, they collect donations from individual donors, and then they use these donations to provide Qard Hasan to different types of clients. And then these clients repay the Qard with a nominal and fixed service charge to Akhuwat. So Akhuwat has a seed capital, it provides loan, and then it gets the loan back, and then they provide loan to another client. So they have a consistent source of flow which is coming in the form of donations. They do not take deposits. They are not a commercial institution, so they operate on the social finance principle. They do not call their model as cash Waqf, but if we look at Indonesia and Malaysia's experience, basically what they are doing is they are having a cash Waqf based Qard Hasan model, where the donations come in the form of cash, and then these funds are used to provide Qard Hasan to different clients. They also have now started another way to use donation, which is to build infrastructure, especially educational infrastructure. So now they are collecting donations to build and operate schools and universities. They are taking donations to build a university in Pakistan, and they are also renovating the government-owned schools so that these schools could be made operational and made to provide services to students in a organized and in a professional manner. So this is their crowdfunding model to provide public goods like building schools and universities. Now, if you look at the regulatory framework, as I have said, that the regulatory framework only recognizes work for mosques, for madrasas, for shrines, but it does not recognize cash work. It does not recognize that work can be used to build infrastructure and so on. So what is needed is that the government should allow private entities to establish, manage, and administer Waqf. That is very necessary. Right now, what is happening is that the chief Waqf administrator, who is the state's authority, state's representative, is having all the authority to regulate the Waqf, regulate the Nazir, and so on. So private entities are not encouraged to be a part of that, especially financial institutions. So it is needed that private entities shall be incentivized to establish, manage, and administer Waqf. It is also necessary that the authority which is vested with the chief Waqf administrator is minimized so that the private entities feel like empowered to make decisions like investment, like renovation of the land, like designing the Waqf land, making it like a mall, making it like a commercial building, which would have increase in value and which would also provide a sustainable source of funding to the Waqf. Like the case of Malaysia, where we have seen that Waqf has been used to make shopping malls, has been used to make hotels, resorts, and then these become a very good way to get increase in the value of the real estate, and also the provision of such services like hotel, shopping mall, resorts. They provide a sustainable source of funding for the Waqf institution as well. Tax credit should be provided. Right now, it is not recognized. It is recognized that if you pay to charity, you can get a tax credit, but the charity to Waqf is not recognized as such. So tax credit should be allowed so that people are incentivized that if they pay to a Waqf institution, they can also avail tax credit, like it is the case in Malaysia. If a donor dedicates real estate, it is important that the taxes related to registration and transfer of property shall be exempted. This is a very important point, because when you transfer real estate from one authority to another authority, there is a tax related to registration and transfer of property, which is not quite high in terms of the percentage value of the total asset, but in terms of amount, it can be very significant. For instance, if there is a real estate which has a value of $1 million, even 1% of that, if paid in the form of transfer taxes or registration taxes, it can become quite significant. And people might feel like, well, why we should transfer the property, because we will have to pay the taxes. If these taxes are exempted, then people would be encouraged to institutionalize what they are doing already. So that is very important. The Waqf regulation also has to basically include the provision for family and social Waqf, investment Waqf, cash Waqf, corporate Waqf. These terms are not recognized in the law, which is quite unfortunate, and that is why people feel to not do cash Waqf based donations in the formal way in by using the cash Waqf name, because it is not recognized in law. So if it is recognized in law, then people would actually do all these activities by the name of cash Waqf, and then we would have a proper institutionalization. There should be flexibility in the use of Waqf asset for investment, which is very important, as also highlighted by Dr. Amir. And this has been recognized in Malaysia, that we have to invest in Waqf properties. We have to renovate them if necessary. We have to make them useful, productive, which is very important for the sustainability of the Waqf, and also for providing more impactful allocation of funds through the Waqf. And then it is also necessary that the law recognizes Ibdal and Istibdal provisions. because let's say if Waqf is made for a particular purpose and now after a period of time that purpose is no longer quite important in the society. Like for instance, if Waqf is built to provide clean drinking water, if let's say over a period of time this is not a big need in the society, then there should be provision that you can design, revise the trust deed. You can substitute the asset if necessary from one place to another place. So it happens that you were operating in one particular area, and after some time, because of several reasons, that land is no longer quite lucrative, quite productive, and having less value. So if you substitute it with a property elsewhere, you can revitalize the Waqf. But this is not recognized and allowed right now. So this has to be recognized as well. And then there should not be any restriction on the definition of the endowed asset to only movable asset. The movable asset should also be recognized. So people do cash Waqf based activity, but they do not call it cash Waqf because the law does not recognize cash Waqf as such. So that is important. The transparent and honest reporting of financials is also very necessary. So people donate to different institutions, but they do not know what these institutions are doing. There is no mechanism for proper periodic financial reporting. There is no mechanism of how to account for your activities in different ways. So people simply just list down their total disbursement in a particular period with no proper approval accounting based system or any other standardized system of accounting or reporting, which is not used. It is also important that punitive actions shall be taken against the abuse of asset by the trustees, because this times that people take donation and they do not use it for the purpose for which creates distrust in the public, and then people tend to pay to individuals rather than to institutions because they do not have any surety as to how their funds are being utilized. Tax amnesty scheme is introduced by the government. If it also recognizes the donation to cash Waqf and exempts such donation, then this could also be a very important way to get funds in the social finance, because people want to whiten their money. If that is allowed, that you can pay to you can pay to different kinds of Waqf, you can build a Waqf, and then you will be allowed exemption of taxes. So people would be encouraged to hand over their private wealth to the state in this way. For Islamic financial institution, they can work in the way of providing diminishing musharaka based financing of Waqf asset, istisna financing for Waqf asset to renovate those assets. Micro enterprise Waqf can be established through university collaborations as well, incubation centers of universities. Family Waqf shall also be recognized. Takaful companies can also chip in, and they provide life insurance in a way that this is also incorporating the family Waqf as well. Islamic banks can also become the collection agents or the investment agents of Waqf institution, and government can also use the cash Waqf because it goes for crowdfunding to meet the shortfall in the public sector development program. They can use the cash Waqf model, and people would be willing to pay to religious charity rather than a crowdfunding scheme where there is no mention of it being religious. So people like to pay to religious authorities. They like to pay to causes which have religious orientation. So if proper crowdfunding is done through cash Waqf model, this can incentivize and this can encourage people to do more donation because they are recognized in religion as well. Waqf-based Islamic microfinance institutions can also be established. The regulator also has to recognize that Islamic financial institutions can chip in with these different kinds of measures in the form of products, in the form of helping out different institutions. So the central bank of the country also has to allow different kinds of provisions in laws so that Islamic banks can provide these services which are going to be directly or indirectly beneficial to the Waqf sector in Pakistan. Like for instance, subsidizing the financing cost of building and renovating old Waqf asset, allowing the micro enterprise Waqf. Right now, the microfinance minimum paid up capital requirement is quite high. So some institutions feel like, well, they cannot really scale up to that level to be recognized as a microfinance institution. So if these laws are made little bit more flexible, then this could help Waqf institutions to also come into Islamic microfinance, or Islamic microfinance institutions to come into the Waqf sector and provide Waqf-based Islamic microfinance.
I'm sorry,
Finally,
Dr. Salman. I must interrupt you, but can you make it shorter?
yes. Now
You have
I'm just
two
going to
minutes.
complete within a minute. Yeah.
Thank you, thank you.
Yes. So in terms of family Waqf, Takaful companies can also come in, like I have discussed before. And my last point is about Waqf-based Islamic microfinance. What is happening is that the regulation for microfinance institutions are also made in a way that they are running like commercial organizations. Like there are rules about debt burden ratio, there are rules about collateral, there are rules about percent of financing allowed as a ratio of existing capital held by the micro entrepreneur. Now, what happens is that microfinance institutions also get donations, also get impact investments, and these impact investments are not done in a way that people are looking for commercial market-based returns. So they are done with the dual motive of making an impact in the society and also to earn financial return in a relatively short period of time. So they are not quite market-based or looking to have competitive returns. So if that is the case, if the deposit base or the funding base of the microfinance institution is not just commercial oriented, so then the rules regarding how these funds are used can also be relaxed a little bit, like the debt burden ratio and the collateral requirement can be relaxed so that microfinance institutions can provide financing. And the regulator has to recognize that in the regulatory framework so that private entities can chip in and they also contribute their role. So I stop here and hope that this was a brief introduction to how the Waqf institution is working in Pakistan, what are the shortcomings in the regulatory framework which have to be recognized and then which need some attention and which need some revision. And through a sound regulatory framework, through recognition of Waqf institution in the regulatory framework, the private entities can also play a better role in times to come. Terima kasih. I stop here and let's proceed with the next presentations.
Terima kasih, Dr. Salman. All right, excellent. Very informative presentation. But I'm sorry if I missed something. My question is, how does Pakistan collect the Waqf fund? I mean, you have explained about the policy and distribution same, but probably my bad, I didn't hear you say how to collect Waqf in Pakistan.
Yes.
Answer, please.
Yes. In Pakistan, the problem is that the regulatory framework does not recognize cash Waqf as such. So most of the laws which are there regarding Waqf, they have been made in very old period, like when Pakistan was not established even. So they were made and they only recognize Waqf for the establishment of mosques, for the establishment of madrasas, for the establishment of shrines. So the regulatory framework does not recognize cash Waqf, does not recognize family Waqf. So what people do is they take the donations as charity. They do not call it that we are a cash Waqf institution and what you are donating to us is treated like yeah. So they simply call it sadaqah. And but if we look at their operations, they are pretty much basically doing what the cash Waqf institution would do, but they would not name it like this to avoid regulatory trouble or hurdles that how you are doing this, you are not allowed to do this, or this is not recognized in law. So what is your source of naming your institution like this? So they avoid the name, but they work on the essence. So they would call it sadaqah, like you have said.
Interesting, doctor. I have a lot of questions in my pocket now, so we will spare a session for question and answer later. At the moment, I believe we have what we have our four speakers from Africa. Dr. Muhammad Shakil, are you there? Dr. Muhammad Shakil, it's your turn now. Doctor, please. Yeah.
Assalamualaikum.
Doctor. Oh, mashallah. Alhamdulillah. Okay, please, doctor. The room and time are yours, doctor.
Assalamualaikum, everybody. My name is Dr. Mohammed Shakil Saliani, and I'm telecasting myself from Kenya, Nairobi, Kenya. And I will be presenting to you about Waqf and how it has actually been operationalized in Kenya. I'm not able to share my screen.
Yes, please, doctor. You are allowed to because you are the co-host now.
Okay, I'm still not able to.
Admin, please help. We also have your presentation. If you still cannot display your presentation, we will help you with the from our operator.
I think you can do those owners, inshallah.
Sure.
You can proceed with the presentation because I'm not able to share the screen. That's why I had sent it earlier.
Okay, Ustad Anwar, please help.
So Bismillah Rahman Rahim is the presentation is being put up. Rabbi shrah li sadri wa yassir li amri wa hlul uqdatan bi lisani yafqahu qawli. Alhamdulillah, this is an opportunity for the world at large to know what has been transpiring about Waqf within the Kenyan and the East African subcontinent. As my presentation was coming up, I'll start straight away from my presentation. Waqf generally was, as we've all heard about, all the elements of Waqf which have been operationalized worldwide. Waqf actually came to Kenya with the Sultanate of Oman. Now, during the slave trade in the early years of history, there was a lot of Omani Arabs which came down to the east coast of Africa, and for the spice trade and slave trade. So what happened is they came and settled in a country, or basically an island called Zanzibar. So when they landed in Zanzibar, it became evident that a lot of people didn't know how to go about it. That people passed on, they didn't know how to put the charity and the like. So the Sultan of Oman actually constructed the Waqf model in Zanzibar, which disseminated or was expanded to the east coast or the coasts of Tanzania and to Kenya as well. So as this whole thing developed about Waqf and people generating and giving and doing things in charity, we all know all the things which mostly at that point in time were based more so on property. So all these rentals, etc., they were structured at that point in time during that economic era. So whatever the economic era was at that time, for meager coins today, as we call them, but at that time it was quite reasonably priced. But unfortunately, the location, the controls which were implemented by the Omani Arabs, they were not easily adapted within the legal system. So in the year 1950s, in the year 1951 there, the Omani Arabs more so left the east coast of Africa. The invasion of the British came, and automatically there were some conflicts because the British came in with the Christian rule, while the Muslims who were on that coastal strip started to fight it. So because of that, the challenges actually increased, and they didn't know what to do. So eventually what happened is the legal system implemented a law that the coastal strip would be entitled to be having the Waqf segment. Now, that was restricted, one, to being only at the coastal strip. Two, whatever documentation was done at that time remained that way. It could not be changed. So it was very difficult and it became very, very rigid. So in principle, you can say it was kind of locked up. So there was no room for expansion. There was no room for growth. There was no room for, understanding, innovation, implementation, even revenues. That was one challenge. The second challenge happened is that those properties which were placed on Waqf, because that system was not very clear and transparent within the East Coast, and we didn't have very many scholars at the East Coast or in Kenya as per se, what happened is that people started, who are made as trustees, they started abusing that trust. They started putting those trusts into loans, etc., getting money and enriching themselves. So those properties which were worth millions and trillions of dollars, they were actually being used by banks to extract more debt out of it. So the whole system became so corrupt until the year 2016, 2017 is when the Kenya Waqf Commission came up and said, no, guys, listen, this thing needs to change. It's high time that a lot of corruption has gone on, a lot of, ambiguity, distrust, all that thing has come up. So we need to change. And the change actually started because, thank you very much. So the change came in and the Waqf Act was started to be created. So we can go to the next slide, please. I've kept my slides as small as possible because I like talking more than reading. So I hope you'll be able to, but this is going to give you a snapshot as how the Kenyan Waqf system has actually been come up. So as in 1951, is the Kenya Waqf Commission Act was created, and automatically the commission was come up. This was an 8-person group of people who were made as trustees to now manage the whole aspects or all registered Waqfs. So in Kenya, what happens is that you have to have a trust first, and then that trust is actually supposed to be registered under the Kenyan Waqf Commission. Now, because the Kenyan Waqf Commission is just 8 people, and you have got thousands of Waqfs which have been put into place, so their capacity actually shrunk. So what happened in the next slide I'm showing is that what happened is that the new Waqf Commission or the existing Waqf Commission got together and built up a new Waqf Act, which was now submitted in the year 2019 in June, which is now taking care of all these challenges which have been faced by the Waqf Commission. So in Kenya, what has happened is that that little bit of Waqf which was created at that time, it used to help schools, madrasas, higher education, and mosques as well. So it was so limited at that time, and even to date, as we speak, the element of understanding of a cash Waqf is still not there. Alhamdulillah, we've tried to publish a number of articles, etc., to get public aware about cash Waqf. But whatever is going on right now is the sadaqah only. It has not been evolved to come down to understand that there is a possibility of doing a cash Waqf, and it can be there for eternity. Although there are a number of questions which are being posed right now, that yes, if it's cash Waqf, what about depreciation? What about the GDP? How will it impact it? Will it remain the same in the next 10 years? Will it be there for eternity? Because all these economic factors are playing a role. But there's always a way around it that cash Waqf could actually be putting up into that cash Waqf would actually be put up into a specific asset which is generating revenues and subsequently evolved as time goes by. So those are challenges which we are meeting and we're facing them in Kenya. So the basic challenge which is now coming about is how to get those trusts coming onto the Waqf element. That is one problem. Second problem is those 8 people managing all those Waqf properties, monitoring them, auditing them, and all that kind of stuff. That's already a challenge. So that is one part. Secondly, the notion which we've always been having is that Islam is charity. So when somebody is giving you charity, the person doing the charity cannot charge a fee. So that becomes that becomes quite a problem to get people to do a full-time job, all right, for the Waqf Commission. So the dynamics have actually changed, that it becomes challenging to tell someone, why don't you join the Waqf Commission? So he's going to say, okay, fine, that's charitable work. It doesn't come in with the notion that, yes, you can earn your livelihood by doing the right thing for the Waqf Commission. So with the 8 people which are coming in, the new Waqf Act which is coming into play is like having a group of 8 members in every county. So in Kenya, we have counties, or a province kind of thing. So what happens is that every province has a group, and then those groups now start expanding and including all the Waqfs within that county. So it becomes easier to manage and support. So now, coming to the current development, as I said, the Waqf Commission has now put in the 2019 Act. Now all the registrations are coming into place. The expansion is coming around the country. The third part, I saw that there was a question which came about how universities are coming into play with Waqf and how it can be done. So I think the sukuk and combination of Waqf and sukuk is actually a new development in Malaysia. And I appreciate Dr. Laldin. I was attending his presentation, and he said that the new development of Waqf, combination of Waqf and sukuk, would be the right way forward to now structure how we can benefit the Ummah in general for universities and hospitals. So these are the structures which we need to investigate more, study, and implement them, because mashallah, all our scholars around the world have been able to give a lot of more contributions a lot more contributions to this Waqf projects. The other thing is, the Waqf Commission of Kenya, we are also participating in collaboration with banks, insurance companies, and international bodies to now bring in Waqfs within the country, especially cash Waqfs, which was then going to be now utilized for so many other projects. So I know my presentation is pretty short, but because the Waqf structures within the country have been so limited, and the only thing which even the Islamic banks around the country are doing, we have 3 Islamic banks in the country. There's Gulf African, First Community, and Dubai Islamic. And we have 1 Takaful insurance company. So all these institutions, even, they are not utilizing Waqf as a structure, but they're more so using sadaqah, as what Brother Dr. Salman just mentioned a while ago, that the element and understanding or knowledge integration or penetration is pretty minimal for the public to understand that, yes, a Waqf can be beneficial. And instead now those institutions move into the sadaqah element, whereby they charge a penalty or a fee, an extra additional fee for delayed payments of the debt, which is supposed to be paid to the bank. So in general, to give it a summary, that a Waqf in Kenya has been there for a very long time, but it is so restricted to specific assets, to the extent today we are not having any new Waqfs being registered. So the Waqfs which were registered in the early years of between 1920s all the way to 1950s and 60s, there are no new Waqfs which have actually been put into place. But the implementation of the new act is going to give us the room and the expansion. And I believe I have managed to share this presentation and this webinar to as many people as I could in Kenya, so that they can learn out of this process. And inshallah, I hope and pray that we'll be able to bring down Waqf in a much more clear and easy manner. So my last night, Jazakallah khairan. Akhiru dawana. Assalamu alaikum. If there are any more questions about Kenya, if anybody feels like to ask, I would be happy to answer them.
Thank you very much, Dr. Muhammad Shakir. Well done. And we have a lot of questions here, and it means that now we move to the second session, question and answer questions. I will try to divide into several sessions. Probably this first session is 3 questions. The first question is from Taufikur Rahman. Right. So, what is the reward for the Waqf giver if they donate land can no longer be used or no longer has economic value? For example, being hit by the natural disaster. Okay, he doesn't pointed this question with whom, but you can answer personally, Dr. Salman, Dr. Amin, Ustad Henry, if this happen or face in your countries. Okay, and then what is the measure of reward for Waqf, measured from the function of the asset being donated, the size of the asset being donated, or sincerity of the Waqf toward Allah subhanahu wa ta'ala? Okay, this is 2 questions from one person, one participant. Another question, is there any product such, it's quite popular now, cash Waqf link suku? I believe in Malaysia does, also in Indonesia. I don't know in Africa or Pakistan, but we have, we can share knowledge and information about this question. And then I think these 3 questions first answered by each speaker, and then we move to other questions if we have more times at the end. Please, which one of you speakers would like to take the first hit? Dr. Amir, please.
Okay, thank you very much. I think Bapak Henry dulu ke dulu? Indonesia dulu.
Okay, Dr. Amir dulu. Sebab this kind of product is very popular in Malaysia right now, I believe.
Alright. Okay, Bismillahirrahmanirrahim. I will answer on this cash Waqf and cash Waqf link with sukuk. So this is one of the innovation. We try to introduce this where the investment in sukuk we try to link with Waqf. So we do have one product nowadays, and this is governed under the Securities Commission of Malaysia, where any investment in sukuk is tied up with Waqf. So what happened is that investment in sukuk will be channeled, the fund of sukuk will be channeled to develop Waqf properties and Waqf asset. For example, there is a proposal to build a hospital which is very expensive. So we ask the religious authority, they don't have fund. So in order to raise fund, we create or we issue sukuk, and this sukuk will be, the fund will be invested to finance or to build the hospital. So this is quite popular nowadays. And the problem, I think I want to raise the problem. The problem with this is that in order to issue sukuk, we have to have a guarantee that the hospital will generate income. Yeah, because the sukuk holders is investment. They will invest the money and they expect return. So in order to pay back to the investors, they are not wakaf. We have to correct the mindset. When the investor, when the suku holder, they invest the money, they don't give as a suku, as a wakaf. They give the money as in terms of investment. The fund is only we invest in suku project. So this suku project, the hospital need to generate income in order to pay back to the suku holders. This is the challenging part, because we are not sure. So we have to make sure that the hospital is properly run, properly managed in order to generate income. So, for example, in 20 years, so the when the suku mature, so we need to pay back to the suku holder. So this is we don't have that suku mature yet, because it's very new. Now is the process of issuing the suku. We just started, but we don't see any problem yet. But I can see that if we don't manage our Waqf project properly, then we will have a suku default. So this is what we try to avoid, but we have to face these challenges. Okay. So the rest of the question I serahkan kepada Bapak Henry to answer that.
All right, Dr. Salman, can you give your perspective on these questions about cash wakaf, link suku, or any reward for the wakaf donator in your countries?
Yes, I agree with Dr. Amir that combining the commercial motive and the social motive can be problematic, because these motives can have conflict as well. And if, let's say, the commercial motive minded people are coming in as different kind of investors, and the people with a social motive are coming in as a different kind of stakeholder in the structure, then there can be moral hazard problem, there can be an agency conflict. So I would recommend that if, let's say, these kinds of structures are popularized and are used, they should be used with the proper risk management guidelines, and they should be used in projects where there can be stable cash flows. Like, for instance, through lease income, there can be stable cash flows, and the corpus of the asset, because of being immovable, would also remain intact. So such operations can be used to generate income. But if, let's say, this is used in startups or in services sector or in sectors where the probability of loss is high, then this would, I think, compromise the very objective of mobilizing funds for the purpose of society's welfare. So I think it is important that there should be proper risk management guidelines, and investment should also be restricted or targeted towards projects where stable cash flows can be earned in the form of revenues. So that is one thing that is very important. Another question regarding the abuse of Waqf land, or the misuse, or the situation where the Waqf land is no longer usable or is productive, that is very important concern. Because what happens is that if a person has donated real estate or property or any movable asset like cash to Waqf, that person is then no longer expecting any reward out of it in the material sense. So the monitoring has to be done by some institution, some other stakeholder, because the Waqf is no longer having any ownership of that property, any reciprocal expected benefit out of that property for himself or herself. So it is important that then the property is not misutilized or is underutilized. So there is importance of not misusing the asset, and there is also importance of using the asset in a way so that the asset remains productive and remains useful. So that is where both the risk management guidelines are also very important, and the flexibility in terms of investment, in terms of substitution and exchange is also important, so that the Waqf does not remain dormant or does not become valueless because of certain changes in economic factors around the Waqf property. So the exchange of Waqf asset with another asset, the substitution, the investment of the Waqf asset, and the flexible use of the Waqf asset can make sure that the Waqf asset remains productive. But at the same time, risk management guidelines should also be there so that the Waqf asset is not misutilized, as also highlighted by our brother from Kenya, that the value of the Waqf property was quite high, but still because of certain issues in governance and regulation, it got that problem of misutilization, and then public confidence also goes down. So that is very important.
All right. Dr. Ahmad, there is another, before we move to Dr. Muhammad Shakir, there is a specific question for you. What do you think about Waqf University in Pakistan? Which could be the best model for Waqf University in a country like Pakistan and Bangladesh? Very short question, Doctor.
Yes, there are two ways we can talk about universities' involvement. One is that we are trying to build a university from start. For that purpose, I think cash Waqf is a better model. Another way universities get engaged in Waqf is in terms of providing some social services to their stakeholders, like students, like their alumni, like other people in the nearby location. So cash Waqf can be used to generate funds for the establishment of universities. Real estate Waqf can also be used to provide land for the construction of university. And then we also have examples of universities in Malaysia like USIM and other universities. They also have their own cash Waqf institution. So what they do is they get donations from the alumni, they get donations from the corporate sector, and then they use these donations to provide Karde Hasan to their students who are in the business faculty, who have business ideas, who pitch their ideas, and then they win the competitions to get funding for their startups. And these startups are then funded from the cash Waqf model through Karde Hasan. So Karde Hasan model can also be used to provide them funds. Mudaraba and Musharaka model can also be used if, let's say, the project is having less risk and consistent revenue base. Like for instance, if university has a location where they would be building hostels for students. So there is a ready demand and the consistent revenue base can be generated. So in such ways, even Mudaraba and Musharaka model can also be used, but in other situations, Karde Hasan model is used. So these are some of the examples that we see. I think cash Waqf based model is quite useful for establishment of universities.
All right. Do you have comments, Dr. Muhammad Shakil, please? Dr. Muhammad Shakil. Please unmute your, yeah.
Okay. Jazakallah, Kunawan. And I think most of the questions were brilliantly answered by Dr. Amir and Dr. Salman as well. So I received one question about family Waqf in Kenya. So apparently we do still have the challenges of family Waqf, and since the initial properties were associated with the Sultanate of Oman, and most of them were structured in such a way that it was restricted to land and buildings, which some of them have disintegrated, and it's very difficult to bring them up. So as far as cash Waqf is concerned and family Waqf is concerned, that's not yet applicable as yet. But we are praying very hard, inshallah, once the act is actually accepted in the parliament. It had been presented in 2019 and expected to be released last year. But because of COVID situations, everything went haywire. But inshallah, with everybody's duas, inshallah, we'll all be able to benefit from the Waqf model and get that act into place.
Inshallah.
So, inshallah. Thank you so much.
All right. Let's move to our next question. Okay, Zem Khalis from Student Stain Sar Kepulauan Riau. He questioned that what do you think about who is the best part of the management of Waqf nationally? Institution or government institution? Like Dr. Amir said, in Malaysia, it's quite about centralized management. In Pakistan, they have institution as well as independent institution, and also in Africa. Okay, please, Doctor.
Yeah, I think it's a very good question. How whether the institution or the individuals or the government should manage Waqf property and Waqf asset. I think in order to answer that question, it depends on the country. In Malaysia, we think that we should adopt this Islamic banking framework, where we have the regulator, the central bank, and this central bank will issue license for individual bank institution to manage Islamic bank. So I think this is the best way to be adopted in Waqf sector. For example, we have the government as the regulator who issue policy, who regulate, who monitor the institution. And then they give power authority to the institution, and they give license, and they monitor very closely. For example, they ask the annual report every year. They give a template how should the institution manage the Waqf asset, and if the institution breach the rules, so we can take the license back. We can enforce them. We can jail the board of directors, the managers. So meaning to say that for me, the government should act as a regulator, and then they give power to the institution, to the companies to manage the Waqf asset. So, but with the condition that we should have this enactment, the law is very clear and is enforceable. If the company or the individual corrupt or breach the contract, so we can take action against them. So I think this is the best way how to move Waqf properties. Thank you.
Okay, Dr. Saman, what do you think about it?
Yes, I agree with Dr. Amir that we should have government as the regulator and as the owner of the property, but the operational decision making or the investment decision making should be with the private institution. Now in the private institution, there are two possible ways. One is that there can be an individual mutawalli, and there can be a corporate mutawalli, or a institution or organization as a mutawalli. So I would recommend that yes, we should go for institution or organization based management rather than vesting the authority with individual. Now the earlier laws, if we look at in the subcontinent covering India, Pakistan and Bangladesh, what we see is that the law talks about individual as mutawalli too, even though not a lot of powers are given to individual mutawalli, but it is recognized. But I think now we have seen a lot of changes, and especially to scale up the operations in terms of mobilization of funds and allocation of funds, and for institutionalization and professional management of funds, it is important that institutions are involved. So the law should recognize and also spell out that what are the different kinds of operational decisions or investment decisions that can be made by private mutawalli organization. And if, let's say, some major decision is to be taken which has strategic implications, then they should require approval from state or some state authority. So monitoring and regulation should be at the government level, but the decision making for operations and investment should be at the decentralized level. But there should be proper risk management guidelines, and like Dr. Amir has said, that there should also be laws which which can take punitive actions against the misuse of authority, and that is also very important. So I would agree with Dr. Amir.
Dr. Mohammed, do you have any additional comments for this issue?
I think
Yes.
I'll concur with whatever has been mentioned, because you see what happens with institutions, they tend to disintegrate. Either there's a conflict or something of that sort. So these institutions cannot be depended on for eternity, but a government can be dependent upon because it has its own constitution. So whichever government will come in, it will just have to just follow that constitution. So the government aspect, which is more of a universal body and an eternal body, compared to a single institution which is there today, cannot be there after 10 years. Maybe the directors passed on or something happened to those institution, or there was a conflict somewhere and the company was dissolved or the institution was dissolved. So if, as far as we're looking at Waqf, we look at it as an eternal project, not as a short-term project. And the moment we think in an eternal way, we derive ways on means on how to make it last forever. Jazakallah.
All right. What I can conclude from this question is, the best way is the more we have Nazir or Waqaf donate, the more we can improve our Waqaf. But when it comes to the any this management issue, and then the government should take part as a regulator.